Hey guys, how are you? Good morning. Happy Monday. It's Seth here, your handsome host. I got Nate here on the board. Nate, say hello.
Hey guys.
I carefully selected, Nate, this shirt today. It kind of matches the book, and I'm going with that lumbersexual look, so it's all working. I hope everybody had a great weekend, and I see everyone tuning in from all over the world. It's great to see you. My wife is watching, and it's just great. I know we are big in Latvia, so here we are. Guys, so this is the update. I guess you all, including myself, have been waiting for a while. I want to tell a little bit of my story, talk about what stocks I was into, the result. Obviously, it was a banging market this past year, so I would think typically results not typical. That was a stupid sentence, but yeah, I'll talk about what I have. I'll show you all my holdings, which a lot of you have seen, but I'll go over them. I'll show you some of the losers that didn't do that well and what I'm planning to do on Thursday. So the follow-up to this will be on Thursday. I'm gonna do a live stream for all the patrons, not just the top 2 tiers, all the patrons. We're gonna go live, and it's gonna be a buying spree. I'll start in the mornings, greet everyone, and I think once 9:30 starts hitting, we'll start buying. So if you wanna get on this journey with me for the next year, it's kind of fun. I definitely have some friends who aren't patrons, just general friends in my life who are going to jump on board. they're excited about this as well. So Thursday, July 1st at 9 a.m., Mo will not be here. I'll be doing the live show one more time. No news, no stock analysis, but we'll be buying, I guess I'm spending about $350K in stocks that day. And so it should be kind of fun. And if you guys want to follow along, we can certainly buy together. So I wanted to announce a couple things. Right now, I'm going to post in Patreon a link that simply says, if you want a little book, I'm giving this book away today to one of the patrons. So you should have got an update in your Patreon about this book. And if you want to go comment down there, Nate and I will choose a winner after the show. And I'll sign this with some catchy, silly phrase on the inside. And I'll mail this to you. So if you want a little book and you've been interested in getting one, I'm sending one out today. And I'll revisit this here in a little bit. So, okay, so why did I get into this book? Let's first start. If you guys are here, I know Grand Poobah said we're going to start buying at 10:06. I know Mo always buys at 10:06, so maybe we'll do that. But anyway, let's see. And then so Nate will be helping me today with some of the comments coming in. So let's just start. Why did I get into this thing? So obviously, I represent you guys a lot on this show. I bring what I think are your questions and concerns to Paul and Mo. And over the past few years, I've obviously learned a lot, just like you guys have, from Paul. Paul gave me this book. I don't read books. I've read like 3 or 4 books my whole life. Anyway, I was going to go into a deep story why I'm not into read, but I'm just not into reading books. I listen to a ton of books, but I don't read a ton. But Paul said, if I get you this book, will you read it? So I read it. And of course, once I read it, it's so easy, I couldn't put it down. And since then, my Gio, my 11-year-old, loves this book too. He gets it on tape, and he reads this book. He loves it too. But it's very simplistic. So, the beginning of the book talks about how someone has a little kid has a chewing gum company. He buys chewing gum, goes to school, and sells it. I mean, the premise of all business. And so then he starts going into how to value this business. So I read the book. I was really drawn to it. And I think some people might say, well, wait a minute, why don't you just invest like Paul? Well, there is a great difference between Paul and Mo, I think, and maybe you and I. Paul has a holding company. He employs, I don't know,
60 people?
60 or 70 people. A lot of families rely on him. He's got 600 units of real estate. Last year was closer to 1,000. They're going to Turks and Caicos on Thursday. And so they just have different, I think, as Paul has said, is he has enough money where he doesn't have to work another day in his life. So he's extra careful as he shows some time with his discipline and stock picking. And so for us, I think normal people, I talk to a lot of people out there who feel kind of lost in their process. And this book for me sort of guided me to a process. I don't know if one of my friends is on, but I was talking yesterday to a buddy, and like a lot of your stories out there, his process was, well, let me buy a little bit of Tesla and that most popular coin, that most popular altcoin, crypto, and we'll see. And I was like thinking to myself, I was trying to explain to him, like, that's not really a process. Someone said, how do I get a PhD without reading journals? I guess I did read. Unfortunately, I read too many journals. Yes, I've read thousands of scientific journals, but that's a whole nother story. But yeah, the process of this book really spoke to me, and it very well might speak to you. So if you're following along at home and you're doing this already, that's great. So the premise of the book is we want to build an ETF for myself. What is that, Nate? Can you mute it?
I'm trying.
Or just knock the computer over? I love you. So the premise of the book is we want to build an ETF of, for me, 30 companies. You can do, I think the book says you could do upwards of 50, but I build 30, and I use a market cap of 500 million, and I'll show you the steps that we go. So Nate, let's get over to the screen and show. So this is the guy that came up with the book, Joel Greenblatt. He kind of looks like this guy, a very typical looking guy, I guess. And, he's a hedge fund gazillionaire, and he came up with this process, which he back tested over the past 30 years. And so this is his website if you've never been there. This is magicformulainvesting.com, and it's free. Obviously, he spams you a bit with some of the books that he's writing, but I don't get emails from this. I don't. It's pretty cool. You just log in. So and then let's see what else. So go ahead, Nate.
I got something for you, Seth.
Go ahead.
Because I've been curious about the little book myself. Can you talk a little bit about the connection between the little book, the book itself, and this website and how they work hand in hand with each other?
Yeah. So come back to me real quick. So the book itself is basically just a long commercial for the process. It just basically it just goes back through time and talks into all the data. There's some confusing charts in here, but it talks about the data about why this system he thinks wins and how it's appropriate. So the book is just a huge commercial that says, go to this website so you can get started. And I was in a unique position, guys, is I had a huge sell-off prior to COVID. So I basically moved almost all of my money to cash, probably about $200,000 to cash. I don't know how I timed it up that well, but I just did. So I didn't go through a huge crash. I had it all sitting in cash. And so I bought $150,000 worth of stocks last July 1st. And so now that we're coming into July 1st, it's time to sell off and rebuy. And so let me show you guys a little bit of before I switch over, let me maybe take some questions. See how we're doing. We're doing great. Okay. And great, guys. We're doing great. Okay. Nate, let's click over here a bit. Let me show you guys some things. So let me go right into my portfolio here. Nate, can you click on my screen here? Here we go.
Yep.
How does this look?
It's looking good.
Good. Okay, guys. So this is basically my portfolio is split up into three things. So this is what I bought on July 1st last year. I spent $5,000. You can see over here, $5,000 per company. And I have multiple companies I can show. Some of these at the time, I had no clue what they were. Still kind of don't actually for some of them. But I got lucky on like this AMCX, which is funny. And there are some losers in here, but if you see, again, not typical, the returns, 11.5, 4.5, this one's down. And I've pulled up on our 8-pillar website why, maybe we can look at why this is down so much. Signacore plus 24, plus 32. Discovery, obviously this is a very famous one we've been talking about on the show, and this was up way up. If you guys remember, Discovery went way up to like $70, $80, and now it's currently back down, but I'm still up 45%. Deluxe Corp, I have no clue what the heck that is. I bought in at 22, it's at 47, so 110 increase. 55, it's 42, 74, HP, incredible. And then if we keep going, so here's H&R Block, which we did a video on. Is that coming out soon?
We actually put it out yesterday.
Okay, so H&R Block is out. We did a video on H&R Block. It's funny, I think Paul in that video said, let's hold off, but it was a little book stock last year. This one's down in Viva, which we've talked about a zillion times. And then look at some of these. What is this? Interpublic Group? I have no damn clue, but look at that, 92%. Corn Ferry, this was the most laughable one. Corn Ferry, 142, look at that. 26, 78. I mean, these are just wild, wild numbers. So the goal of the book, folks, is, Nate, is it's twofold. Is we want to beat the market, hence the title. But I think a lot of us out there, as if you're normal folks, maybe have a swayed view, at least I did, of what beating the market is. Like, because we hear these numbers with Bitcoin and AMC and the Diamond Hand Ape Nation out there of like, I want 3,000% return. And so Paul has described to us, and using our retirement calculator, you can see that I'm actually just aiming for 2 or 3%. I think Joel Greenblatt does a great job explaining that. We need to just slightly beat the market. And Mo does the same thing. If you're in the Bidnast Nation, you're trading. You should be very happy and proud with a 2 or 3% gain on some trades. So I was for sure. So anyway, we'll get back to it.
Seth, a lot of questions asking about the biggest winners and losers this year. For all the normal folks out there who are looking at the numbers, looking at your holdings, seeing, this is just a bunch of numbers that are Christmas colors. Which
sorry about that, guys.
Which do you think have been the best investments and also the worst investments?
Well, I mean, you know what, guys? That's funny that you guys say that. That's funny they're saying that, Nate, because to me, these are just Christmas colors as well. I mean, the point of the book is I did not do a ton of research on all these companies. I have no idea. I mean, Herman Miller's Furniture, Altria Group, obviously we know is smoking, but Omnicorp, I never even looked it up. I guess I just trusted the system. So what I thought, I mean, the best investment is probably the one that went up the most. I don't know. I am curious to see, and I do have a list of the stocks that are staying on for the next year. which I can pull up. But let me keep showing you guys real quick. So this one was the worst one, Paradiso, and I don't know what they do. Something about, I can't remember what they do. We've discussed them before. Look at this, down 20% for the year. But this company is on the new. This company is on the new little book stocks that I'm going to be buying on Thursday right here. And so apparently the system still thinks that it belongs on the list. So I'll be buying it, which I'm not too happy about, but whatever. Okay, and then here we go. So this is the final page of my little book stocks. And Tivity Health we talked about before. We did a video on this. Gosh, Tim, it must have been like last fall about Tivity Health, and it's hilarious, guys. If we do a video on some big banger that's in the news, we get like 10,000 views. If we do Tivity Health, a stock that no one's ever heard of or care about, we get very few views. And look at that, 145% on Tivity Health. So I bought it $11 a share last year. It's up to 27, astounding. And then Unisystem Corp, again, 147, amazing. And so here's the gist of it, folks. Right here is that I started last year with $150,000. Now, see, this is funny because it says plus 76. This number doesn't actually. Nate, look at that. That math does not make sense. Actually, look at that.
I was wondering about that.
That is funny. I definitely spent 30 times 5,000. So maybe. Oh, okay. I'm sorry, guys. One of these actually. Okay, you ready for this? I wrote a covered call on Biogen, and it got taken away from me. So I had a few hundred shares of Biogen. I think they're pulling this out of here, which now would make this number completely explode. This return of 48%, 49, it was upwards of 59. And Paul had helped me write some options on Biogen. So I did lose Biogen. I lost the shares, and that sucks, actually. So anyway, but the current total is 246. And now when I think about it, this would be even higher. So it's about $100,000 gain in the past year. Now, again, what does all this mean, folks? So the S&P returned, here's the S&P returned the 1 year 40%. We're at 48, 49%. Here's SPY, the ETF, same thing, around 40%. So I did beat the market this year, and I'm pretty happy about it. I would say, let me pull up, Nate, you can get back at me. I'm gonna pull up some comments while we're plowing through here. I would say, folks, it's twofold. We obviously want to beat the market by a couple percentage, but when the market corrects, not if, but when, the companies that have a ton of cash, the companies that are not in super debt, they're not issuing exhaustive shares, these companies that we're investing in with this program will hopefully survive a correction better than these high flyers like all the hype stocks. So go ahead, Nate.
Got a question from Medicap. Do you think most of your gains are because the whole market is up coming out of the COVID dip?
I do. Yeah, I do. Yes, I do. I mean, I didn't buy at the lowest of the low. Obviously, it's very hard to time that. But for some reason, I got brave enough to buy in July. So yeah, I do think, like I said, premising that everyone won last year. I talked to people, so my financial advisor, they did phenomenal. It's like, well, if you look at the numbers, that they probably did, but in comparison to the market, they probably did or did not. I mean, and so my goal was 2 or 3%. In this case, I got between 8 and 9%. And so going back, guys, if you're a patron, I'm giving this book away. I'll sign it in blood. No, I won't. I'll sign it for you and send it off, and I'll send it UPS to you, or I'm sorry, United States Postal Service. So you should get it by Christmas, but I'll sign this book. Go in Patreon right now. I just put up a link and just comment below. I said, if you want this book, just say, give me the book. And Nate and I will pick a winner for that. Okay, so what else, guys?
Question about Ebix. I know they had fraud this year.
Yeah, so I did make a mistake on Ebix, guys. I'm new on this. I mean, I'm still new at all this. I don't know why I did this. Paul's very much a follow the system, so he's mentioned on the show multiple times. Ebix announced that there was fraud, and I don't know why. I just thought, well, this would exclude it from my list, so I'm getting rid of Ebix. I sold all my Ebix. It then plummeted off. So yeah, I had $5,000 in Ebix, and it was really high. And then once they announced fraud, I don't know why, I just said, I'm just gonna get out of this. So Paul would argue to just follow the system, because he would say, as you've seen with this discipline, is if you bend the rules a little bit here, you'll then talk yourself into bending your rules a little bit later. And so I probably shouldn't have done that. And yeah, this is really a set it and forget it type mentality. So I hope I mean, I love looking at this stuff, even if it goes up or down. And if you've watched the show in the past, which I'm sure you have, is, like you'll start falling in love with the red days because you're probably better set than other people out there. So when me, Kevin, and Stockmo are whining about their losses, we're smiling ear to ear over here. Paul's buying lunch. It's like a party on red days over here. So you'll learn to get in this mindset of like, if I buy solid companies when there are red days, I'm probably not losing as much as the other ones out there. So how did I get off on that tangent, Nate? I don't even recall.
We were talking about
EBIX, yeah. So don't do what I did because
Uncle means following the system.
Yeah, because Uncle Paul will just remind you of it for the next 30 years. So be careful out there. What else, Nate? What are you seeing? Why did we pick 500 million? Paul just told me to pick 500 million. You can pick whatever you want. I guess what I'm gathering is the lower market cap you choose to choose your stocks, the maybe more risky. I don't know. It's all in the book. I mean, again, I'm not here to do a book review. You got to read the book. You might be drawn to some more of the data than I was. I didn't necessarily come on here to be a book specialist. I mean, it's a huge book with lots of numbers, but it describes, you could probably pick whatever you want. I know people maybe want to be a little more, how would I say this? Conservative. You can pick bigger companies that might be more stable. So go ahead, Nate.
Here's a question from Gary Truman. Do you think you'll do better now being able to go through the stocks before you pick?
Well, Gary, I mean, do I think I'll do better? I have no clue. I'm not planning on going through a ton of the stocks before I pick. I guess I'm just trusting the system that they've put in place. And some might say, well, why would I do that? It's like, well, before this, my system was nothing. I mean, if you really want to get down to it and you want to do a version of this, I have heard people say, Nate, that you can get your little book stocks and then you can compare them with your 8 pillars and then keep doing more research. How would I say this? I know if I say I don't have time for that, Paul will get after me because I don't make time to research more. But so if you want to research all the way down to like which ones you want to pick, you can build your own ETF. I mean, I'm just sticking with this book. I kind of like it and the guidance they give me. So is Paul here? Oh, boy,
yeah, just joined the chat.
So yeah, obviously the mood changes when Uncle Paul's here over my shoulder here. Okay, the little book that might beat the market. That's right, Ian. So this is what's coming up this week, folks. If you share, Nate, a little bit here, you can see that these are the top 30 stocks that I will be buying this week. And let's see, someone says, are you going to apply the 8 pillars to the magic stocks? You could. I mean, you could go through this again. You guys can do whatever you want. You can go through these new stocks. You can add 8 pillars, and you can add the 8 pillars to them, and then go into 10Ks, whatever you like. But yeah. Oh, someone's saying, Rich is saying it's a great book and it's a 4-hour listen on Audible. Yeah, it's a great book. Seth sounds afraid it was Paul. Paul, guys, I saw Paul yesterday at Home Depot. And Paul and I always agree that it's so awkward to see each other in real life outside of the show. I mean, we hang out in real life, but like just to see Paul doing normal people things at Home Depot.
You're like, oh, Paul goes to Home Depot too.
He's like me. Yeah, and he's shorter in real life, actually. If you meet him, folks, he's Paul, I'm busting your chops. You know I love you. So, okay, guys, so go back to it.
I got a question, Seth.
Go ahead.
So these are the new little book stocks here.
Yes.
Did you find these on the website, or how did you get access to
Yeah, all I
these?
did, folks, is if I go back to the magic formula, you just log in, which he just gets your email. And again, I don't think they've ever spammed me. Maybe when they released the book, they sent me one email. But you just simply log in, give them your email. I mean, why don't I do it here? Let's see. Here I am. There's my. Here we go. 500 million, and boom, get stocks, and here's the list. Pretty simplistic, actually. So That's it. I mean, you just click 2 buttons and you're there. So if we go back, these stocks I'll be buying this week, and it's funny is because we just did H&R Block, and Paul said it wasn't terrible, but it wasn't a complete slay. However, I think in the video we weren't talking about. Maybe growing. He was actually reducing their growth in the future. So, look at this. Dick's Sporting Good is on here, Gilead, and then some of the, HP's still on, Innoviva's still on, MSGN is still on, Nautilus. Here's that, Education. Here's that Paradiso. I don't like this, but okay, it's still on. I'm buying it. And Quest Diagnostics, we've done videos on this. Look at this, Tupperware is on. So yeah, no, I plan on buying these on Thursday, and so if you guys want to join me, patrons only on Thursday. One more time, Nate. Patrons only on Thursday, 9 a.m. We're going to go on a spending spree. I'm going to be spending my $250K and my wife's $100K. And if you want to get on the train for July 1st, that's what, oh, greetings from Germany, great. GME is on the list. Who said that? Ian's hilarious. Go ahead.
Relating to buying the stocks on Thursday, here's a question from Gianni. Why are you buying them now? Is it because you hold them for 1 year?
Great. Yeah, guys. So, okay. This is confusing a bit. So if this was just a general brokerage account, you open an account on Fidelity, you put money in it. Obviously, if you're trading with Mo and you get income, you'll have to pay taxes on that. There are different tax implementation.
Tax.
There are different tax rules if you hold a stock under 1 year and over 1 year. And so, yeah, I am surprised that here Turtle Beach is not on here anymore. That sucks. I love that. But so in my case, which I just found out from Mo, is in my case, I have my money in a rollover IRA. So that as far as I know, the tax code is different. I don't have to pay taxes because it's already paid, or it will be paid when I pull it out. And so if you're in a general brokerage account, what you would do, for example, if you were me, is prior to 1 year, you would sell the losses to write them off, the stocks that did not get you any money. So for me, it was 2 or 3. And then you would, on your 1 year anniversary, you would sell off all your winners that you've held for a year. You would sell off all your winners, unless, of course, they stay on the list, and then you would just keep them on the list. So I think on this new list, Nate, over here, on this new list, there are at least 5 or 7 stocks that are staying on that I just won't rebuy. I'll just they just stay in my portfolio. And so I will be buying some more money this year. So I have $6 or $10,000 more I'll be putting into some of these. So the next question I think some folks might be asking is, what if I don't have a huge sum of money all at once? The book also describes how to do this, like buy a little this month, buy a few more, and then your bookkeeping will have to be a little more on point. If you say this month you buy $5,000, even 500 worth this month, and then next month it's 500, so on and so forth, you have to keep your bookkeeping and your dates and stay on it a bit. But for the typical person like yourself, some of the new people who are getting on this train, if you can buy all at once, it's super easy because you really don't look at it and do anything for a year. And if you're buying on a monthly basis, say you have extra money to put into the system every month, then you better get an Excel or Google Sheets document and just say when you bought it and when you need to sell it in terms of wins and losses. So what else are you hearing?
Last year, Seth, were you buying all at once, or did you end up spanning the purchases out?
Yeah, great question. So I bought all at once, guys. I spent $150,000 on July 1st, and then in a year, again, there is some weirdness in here. So it says my current balance value is 246, up about 100K. But I also had some Biogen shares in here. Biogen was a little book stock last year, and so I wrote some covered calls, and they got taken away from me. So this number's a bit skewed. It should be more, obviously, because Biogen has since exploded. And now that I think about it, I would have loved to have kept that Biogen. But anyway, it's a great return, 48, 49%. This was upwards of 59 if you include a Biogen and whatnot. So the market returned about 40, and which of course it just slayed, and this still did beat the market. So, okay, folks. Other questions, Nate? Let's see what else we're doing here.
Trying to see what we got.
Again, folks, if you want a copy of the book, if you're a patron, go on Patreon right now, whether it's on your phone or on the app. If you want a copy of the book, I just put up a little thing that said, hey, I'm giving away a book. Just go ahead and comment, and Nate and I are going to choose a winner, and I'll sign this and send this off today for you. So
here's a question, Seth. So if the company stays on the list, do you buy more of them if you allocate more capital?
Yeah, good question. Yeah, I would think so. If I'm coming in with more capital, say I have 10 grand more, I would split that up between 30 companies and then buy, I would buy, whatever that is, $300 of each. Is that right? Yeah, something of that nature. Yeah.
Matthew Jones made an important point. He said, when's Seth going to mention his insider trading as a Lordstown employee?
Yes, guys, if you haven't, and Mendy's saying I did sell ebooks. Yes, guys, if you haven't seen the Lordstown, Paul did indeed. If you haven't seen it yet, it's a must. It's an Everything Money exclusive that we did film Paul's interview at Lordstown. They're in dire need of a CEO. And boy, did he really take it home. That interview was just phenomenal.
Wilbur was blown away.
Wasn't he?
Yeah.
A handsome guy too. What was Paul saying? So you're just splitting the total amount you want to invest by 30 companies. Is that what you said? You're just splitting? Yes, that's true. That's true. Paul's saying no. What am I saying, Paul? No. You're just splitting the total amount you want to invest by 30 companies. Oh yeah, that's true. That's true. Yeah. So if I want to invest, Paul's saying yes. If I want to invest new capital, I will be splitting it up into 30 companies. That's correct. Yes, and Steve is correct. You want to keep your allocations equal. I don't know if I said otherwise different. Oh, I see. Maybe there is some confusion, Nate. Maybe there is some confusion because, right, I already own some and I'm buying new. I'll have to look in the book.
Yeah. So
I don't know.
I guess it comes down to, are you going to hold on to like H&R Block, or are you going to sell it and then buy new ones? Or...
No, I wouldn't sell and buy new because that would be pointless, right? It would still be there. That's a good question, though. I mean, you sell some property. Yeah. So, yeah, I'll have to look into that, guys. I'll find this out by Thursday, obviously. What else did someone else say? You guys are doing great today. If you're watching this later, make sure you guys follow along on the patrons. Again, Thursday at 9 a.m. Eastern, I'm taking over the morning show again, and we're going to buy up all this stuff. So it should be fun. Edgar's saying, I believe you just refill companies that stay on the list. You don't have, so you have an equal amount. That sounds correct. Yes. Oh my God, look at Joseph. Seth, what was your net worth?
Thursday at 2.
Do you want to do?
Am I doing 2?
Do you want to do 2 instead of 9 a.m.?
Well, 2 doesn't give me a ton of time to buy, but whatever you want to do, Tim. I've been announcing 9 a.m. since.
Oh, that's fine then.
Yeah, I thought I would talk for 30 minutes, and I think 9 a.m. is better for our overseas folks. So yeah, we'll do 9. Joseph asked, what was my net worth at 30? Minus $15,000, I think. Oh no, way more than that. Minus 40. So I did not have a job until I was 30 years old. I was getting a PhD. So I was in school for about 10 years. And so, so net worth at 30 is nothing. In fact, minus about 25 grand in student loans and 10 grand in credit card loans, and probably equal amount of Magic the Gathering debt. And so, I've done this. So my wife and I have, so this is just one of my accounts actually. So I have about 350 grand saved for me, and my wife has about 100. And just because we were basically just saving for me first, she didn't make a ton of money as a teacher in our first few years. So,
here's a question from Jaime. How do you distribute the money? I don't think you're buying all the Little Book stocks. So what makes you put more in one company over another for Little Book?
Well, I want to when I am buying my Little Book stocks, I want to take all my money and divide it equally to equal weight. So you don't weight more companies over others. You could if you want to do this personally. I mean, if you want to start with Magic Formula stocks, run them through the 8 pillars, read 10Ks, and then decide which one you like more. You're welcome to try any system you guys want to try. I'm just in love with this one because I don't make time to monitor this on a daily basis like Mo does, where Mo's just trading on a daily basis. So this is more of a set it and forget it type thing, and sort of rest my head easy knowing I've picked what I think are some great books. Is that the question, Nate, or am I reading it wrong?
I would say you answered it. You said you distribute it equally, and I know that's what a lot of people were looking for.
Yeah.
Questions about the stock analyzer? Maybe Paul can hit that one.
Yeah. What are they asking?
When is it going to be available?
Oh, of course. I love you guys. Rich. Coming soon. We talk all about when those are going to be. But Paul could mention. I'm guessing, Tim, in the next couple of months, stock analyzer, right? July. So let's go back. We did have some losers here. You loser. We did have some losers in terms of. Oh, I pulled this up, guys. If this isn't enough to. Nate, can you see this right here? This is our retirement calculator. Okay. So I put myself in here. I'm 40. I'd like to see 10%. I'm retiring at 70. My current savings is 450. I want an annualized return of 6%. The more numbers I sprout, the more confusing it gets. But I'm going to live till 90, as Uncle Paul tells me. I save 32 grand a year, which is going to be more, which is going up 5%. And inflation, 200 annual income. I do have a wedding photography business and a separate business on top of that. So if I want to live with 150% of my income in retirement, I hit generate. We can see that right now it says, when I retire at 70, I'll have $16 million. Paul, that sounds a little high. And when I die at the ripe old age of 90, my kids will have $28 million. And this is, but look at this, folks. So I'm at 16 million at 70. See here? But if I just take this to 12%, this is beating the market. Now, will I get this every year? No. But you can see the massive, it just went from 16 to 25. So I guess I try to tell normal people in my life, let's just chase down that extra 2% instead of chasing coins and nonsense. This is what Paul has taught me, and I love this idea. Look at that. So 25, 16 goes to 25, and then look at this number, Nate, $62 million.
Wow.
Never thought this could ever happen. Son of a couple normal peoples. So yeah. So and I guess the big gainers, if you look at oh my gosh, I got this new book. I'm just going to talk about this new book like 100 times over, Nate. It's called Richer, Wiser, Happier, and it's an interview with like some of the top investors in the past century. And I'm just going to talk about this book ad nauseum on the show because I'm actually reading a book and I'm loving it. And the book just sounds like Paul's mindset. Just like every top investor sounds exactly like Paul. I'll go into it no, but anyway, I don't know why I said that. But they were talking about this discipline, small gains, and how like Warren Buffett was making, some of these top investors were making like 15% over 35 years. I mean, just absolutely killing it. God, what if I put this to 15%? There you go, 57 million and 154 million. This is how I can really get up there. But yeah, so I guess the goal is 10. We know the market returns 10. So yeah, so what I wanted to do too, folks, is get into the Everything Money software and look at some of the things that some of the companies that did not perform over the last year. And Paul would be a lot better with these numbers, but in terms of Coherus Biosciences, yeah, they didn't make any money, so their profit's down. I will look at this. Paul's wincing right now. They added shares in the past 5 years. Look at that, 80%. So they don't have a price to free cash flow. But in general, their market cap is, where is their balance sheet? Any pillars? Yeah, so their market cap is 1 billion and their free cash is, wow, 400 million. So that's still trading pretty low. How do they have free? I'm sure their free cash from last year is down. The other one is, this Perdocio Education. This is on the new list, so I'll be buying this. Let's see, we're doing good actually here. Look at this, Nate. Still incredibly low PE, a nice profit margin. And look at this, market cap 900 million and their free cash average is 200 million. Look at this. So this gets our free cash well under our 20 number, pillar number 8. And they're just a little bit of shares, but that's not too bad. So anyway, I guess you can see we've definitely done there's definitely a ton of talk on the Discord with patrons of how the little book stocks and the 8 pillars magically, they do match up quite well. And so, yeah, I'm not surprised that's why Paul developed the 8 pillars and told them to me that one lonely day last year. So, okay, Nate, other questions we're seeing along here.
Well, we got a question from Ron Burgundy saying that when you take profits from stocks, are you buying a new flannel shirt?
Ron, that's a great question. Yeah, I would say that this shirt is like, gosh, it's got to be 10 years old. Some of my favorites, and I think they're running dry now. I think I've ran the gambit of my shirts on the show, so I will, Ron. Yeah, I will be taking profits, and I plan on blowing most of the profit on whiskey and women, and then the second half I'll just blow just furiously on crazy stuff. So that's where I'm going with that. So
here's a question from Marcio. How often is the little book list revised?
Oh, I think it's revised once a quarter. Yes. So the most recent quarter data, they pull in the new data. So like I was hoping we'd have new data because just before this, you're still going with December data, and a lot has changed in the past few months. So yeah, so they pull it in, and here it is, priced from just recently. So yeah, I was shocked to see that Turtle Beach is off this list because I love that. I love that stuff. But anyway, keep going, Nate. What else do we have?
We're getting some questions about flannels. What are your favorite flannel stores?
Right. I don't have many, folks. I don't have many. I mean, I like a G Star, and but they've shifted their brands and so their look. So and Seven Diamonds. I'm gonna call Seven Diamonds, see if they want to sponsor the show or me, Tim, because I'll wear their shirts every time, and everyone asks where I get my shirts. That's where I get them from. Seven Diamonds. We need an affiliate link for them. I'm gonna talk to them. So, okay, what else, guys? You're doing great. Make sure you fondle that thumbs up like you're tickling Paul's pale white belly. And yeah, again, folks, if you're just jumping on, I'm giving away a book. So if you're a patron, go in Patreon and just comment on a post I just put up at the beginning of the show about an hour ago or a half hour ago, and just say, I want the book, or give me that book. And Nate and I are going to choose a winner and send this off. So maybe I'll get Uncle Paul to sign this, in Braille. Okay, what else, folks?
Here's a question. Is 15 stocks diversification enough? I want to create a new separate portfolio for the little book, but not so much free cash.
People are so funny. He advises 30 or 50 stocks. I don't know if 30 or 15 is too little. I mean, I don't know. I don't know. I mean, whatever you want to do. I mean, I guess it's totally up to you. I'm just sort of trusting the process. And I think if you look at standard ETFs, even like ARK K has 30 holdings. So, yeah.
This year, Seth, do you plan on just doing little book stocks, or are you thinking of investing in some different stocks or ETFs along the course of the year?
Yeah. So, all right, Nate, keep it on me real quick. I can actually screen capture before you don't head over to my computer quite yet. But I guess I can show you guys what else I'm into. So my wife is into the same stocks, so I'll be selling hers and jumping back in. But let me screen grab my other account. And I can show you guys what I'm in here. I think, let's see if I do this, Nate. Let's see, can I do this? Okay, Nate, check this out. You can go over my screen now. So here is, I have about 100 grand in like other money that I'm using, but you can see here that this is the other stuff that I hold, and it's not doing as well. So my return is only, look at here. And so it's funny is I was thinking about putting all of this money into the little book as well. So yeah, look at this. Look at this since I bought. Look at here, you son of a gun. Look at here's down. So this just means, again, it's not what I buy, it's where I buy it or what the price I pay. Obviously, we've done videos on Jets. Paul loves Intel. And some of these, Carnival still, CCL is still doing great in Cisco. But some of these are not doing as hot. So I thought to myself, well, this is actually funny. This is kind of the funny money that I have, me making the decisions, and it's not working as well. So yeah, so maybe I'm thinking about putting a lot of this. I am going to save some of this for trading with Mo, because I do want to save maybe 20 or at least $30,000 to trade with Mo. But yeah, that's some of the stuff I'm into at the moment. Look at that Biogen still screaming. Oh, it's down from 400. Okay, what else, Nate? We'll keep going, guys. You're doing great.
Do you feel that the general market will be a good stock investment environment? There are fears of market crash, but only speculations.
Yeah. So as Paul would say, we have no dang clue, and if anyone else says they do, they're misleading you. I mean, anything could happen, as we know with COVID. One day everything shuts down. But these stocks are supposed to be correction crash proof-ish. I'm sorry, that was stupid to say. It's likely that these stocks would not get blasted as much if there was a huge correction or crash. As Paul always says, the real high flyers, the ones that are overly valued, they'll get busted up the most first. And so Paul would always say, for normal people, if you seem like you're a normal person, not a wealthy gazillionaire, I would just keep dollar cost averaging it. This is the whole gist of our whole show, folks. I mean, in essence, all the talk, all the videos is we want you probably putting 90% of your money into a safe ETF. And then if you want to fiddle with 5 to 10% of it, you can. This is my safe ETF. The little book is my safe ETF. So yeah, how's that sound, Nate?
Sounds good to me.
When will the market crash, gents? Oh, everyone knows we can't tell. Seth needs to go back to stock. Oh my gosh, how funny.
Here's a question from Dads with a Purpose. Does Beth get a choice on the stocks you choose? He says, I know my wife would.
No, Beth stays out of it. Beth stays out of it, and there's a lot of trust. I guess if you're in a new relationship, Nate, you might have to develop this trust. Beth and I have been together for 20 years, over that actually. So I mean, there's just a lot of trust. It's gotten to the point now, Nate, where I can be like, Beth, I think I got a really screaming deal on this $3,000 Magic card, so I'm gonna go buy it. And she's like, okay, see you later. So I mean, like, sometimes, you have to build that trust. But no, Beth usually stays out of it. She does a lot of great things well, and there's no need for her to get into this. It's too confusing, I guess, for some. But if you're new out there, it doesn't have to be. But we're great. That was a weird question. I mean, I'm just answering it like a dummy. Go ahead, Mo.
Here's a question from Simon. Why are you picking new stocks after 1 year? And maybe I'm on the right track here. Is it just part of the magic formula?
Yeah, it's just part of the formula. I mean, we reassess after a year, and I guess if you could see some of the stocks I bought last year that went up 145%, they might not seem incredibly underpriced at that moment. So they've exploded and well beyond the market. And so they're not selling for a low price anymore. So let's get rid of those. One of those now have become maybe more popular, high flyers. Get rid of those and then rebuy new companies that maybe you've never heard of, like Quidel Corp and Sage Therapeutics. Because the magic formula tells me that these are currently the ones that, based on earnings yield and return on capital, these are the ones to buy. So it's a good question, but there's Beth right there. No, Reed, I have not sold and bought yet. I'm going to sell off. Let's see. I'm going to sell off my winners on July 1st and then rebuy new stocks on Thursday, July 1st at 9 a.m. So if you're all over the world and want to join us, I'll be taking over the morning show, patrons only, and we'll be buying together. So if you want to get on the train with me, there's a lot of people. I have people in my life who are jumping on board. Not my train, just the train that's leaving the station July 1st at 9 a.m., which is this Thursday.
So you said you were selling off the winners. What will you be doing with the losers of this year's portfolio?
So you sell the losers prior to 1 year. So typically I would sell those today, tomorrow, the next day. However, mine are in a retirement account, an IRA, rollover IRA. So the taxes are different, so it wouldn't matter. But I will probably sell off the losers, which there's only 3, right? I guess maybe we need to redo this a bit. So again, folks, here's the stocks I bought last year. Coherus Biosciences, this one's gone. You're dead to me. Innoviva, which we've done videos on, it's down 3%. This Prodosio, this is still on the list, so I guess I keep this one. Ugh. And that's it. What is that? 2 losers? So
Nice. Not very many.
Not very many.
This was an excellent year.
It was, and of course it's been excellent for everyone. So Simon says, could you leave it in for 18 months or so? You could do whatever you wanted. The book says not to, but yeah. Oh, okay, yeah. Oh my gosh, Sage Therapeutics has an EM video. I don't even know her own content. All right, great. I love you guys.
So I forgot my question.
That's
Sorry.
okay. That's okay. So folks, tomorrow, Mo is back live in the morning, just announcing. I'm not shutting this down. We can keep going until you guys want to keep asking questions. Mo is back live 9 a.m. in the morning, and tomorrow is the Tesla giveaway. So if you're in Discord, patrons, if you're talking to friends, make sure they're on the show. 1 p.m. Eastern tomorrow. We are announcing the Tesla winner, and it's going to be incredible. So you don't have to watch to win, but it would definitely be fun if the winner was watching. So we're going to announce that tomorrow. So now people are asking about magic cards. Yeah. Do you ever think about buying a company? Yes. So Blunt Gang's asking, Seth, do you ever buy into a company because it's into stocks to hold long because you think they have future potential, or just stick to the financials? Paul has talked me out of just sticking and believing. So no, we usually try to stick to the financials as much as we can. So okay, guys. Oh, Gio is here. My son is here. Gio. Oh my gosh. Hey, Gio is here. Oh, there he is. My 11-year-old who loves Little Book. Yeah, guys. Okay. All right, folks. Let's do this. Alex, no Tesla for Europeans. No, I would say we put all the we put all the patrons in a list. So there was many thousands of entries. We put you all on a list and we randomized it. And we're gonna give it away tomorrow. All right, folks, that's our show for today. Patrons, Thursday at 9 a.m. Join me. If you want to get on this and try it with me, let's get after it. I'll be buying 350K on Thursday. It should be kind of fun. It's always fun to blow money, and especially when we have a process here. And so I'm really happy about that. So that's our tape. Nate, thank you for your help today.
Thanks for tuning in, everyone.
Again, patrons, go into your Patreon right now. Blow Paul's phone up by commenting that you want this book, and I'll have Uncle Paul sign it, and myself and the whole team will sign it and send it off to you today. So if you want a little book, I'm sending one off. That's a giveaway for today. And yes, Alex, a kid's name is GEO. That is funny. So all right, guys, I really can't thank you enough. I love you from the bottom of my heart, and you really have changed our lives. I hope we're changing yours. We get tons of comments about how we're doing just that. So we appreciate your support, and we're happy you guys are enjoying that software and being in the patron. So, all right, you two. All right, you guys. I said you two because I was reading my name and your name. So it's like, all right, you two, let's wrap it up. So, all right, we're gonna start recording today. We go live tomorrow. Tesla giveaway tomorrow at 1 p.m. Eastern. Thanks for joining, guys. See you next time.
See you tomorrow, guys.